So this video is sponsored by Pionex, one of the exchanges I use all the time. It's one of the main crypto brokers to Binance, so the volume is very high. The main thing that sets them apart though is that you can use free trading bots, a variety all designed to benefit from different market behaviours, whether that's up, down or sideways. You'll get 20% off all your trading fees for life with my link in the description. And if you join the Telegram, a lot of us already use it, so if you've got questions we can try and help you out.
Hello everybody, welcome back. Let's have a look at some of this crypto, but first we're going to have to look at Forex. I know, boring, but let's get it out of the way. It's very simple. This is euro dollar, still in this rising wedge, so technically a bearish formation, but at the moment gaining support on this bottom portion of the wedge. Now, if we think about the supports on the 4 hourly, backed up by a 50 exponential, it's also at the bottom of the Bollinger Band. There's a fair bit of super support running around this, currently around 1.8.5. And if that breaks, then I think that would be the cascading effect. Same sort of deal if we look at this over here on the daily. So 108.5, 10 exponential. A drop from there brings us down to $1.7.7, and so on and so on and so on. But yeah, for the moment, it's still trending up in this wedge formation. Breaking down below this level though would break the formation and probably have continuation down. But until then, it's going to keep going up. The euro's strong. I don't understand it, but it is. It's going to keep going until it's had enough. The euro is strong. I'm finding it hard to accept, but it is true. And so we'll base it on the TA. I have scaled into short, so I am actually in a short, which is still in profit, but tight stop loss, obviously. S&P. So we can see that recovery took place. We're outside of here. Don't think stocks are looking particularly bearish at the moment. Not at the moment. The bearish divergence cancelled out on this last drive on the 4 hourly. And on the daily for the S&P, what we've got? Same old deal over here. So cancelled out bearish divergence. So offering, I suppose, one more attempt for a high. We might even close the day green. We might even see, 4,170. Maybe. Again, I haven't checked the pre-market. I don't usually feel as though it's worthy of checking the pre-market until a little bit later on in the day. But we'll see where things go. Now, speaking of pre-markets, I suppose you can think about Bitcoin as a pre-market for at least NASDAQ. And if that is the case, then we're more or less unchanged. Everything's unchanged. We've been sideways for this whole time now. You can see this on the 4 hourly, basically sideways. That big stab up, instantly sold off. Came back down to this range that we're in. The range basically being 22,500, top of the range effectively being 23,300, right? So with this being a range-based kind of situation, you basically look to see if the momentum picks up to which direction it wants to go in. We'll get rid of a lot of this noise here. We don't really need any of this anymore. So what do we see over here? So we're getting basically a sideways range, but we're getting lower lows, lower highs on the RSI. So what you'll be looking for would be higher highs, higher lows on the RSI, like a standard divergence. Let's take it to 12 hourly though, a bit of an intermediate time frame. Still relatively good, hanging around at these particular levels. Above all moving averages with the golden cross. The bottom area of the pullback would be, if we were to get it into a golden cross, the absolute epic opportunity, if it were to ever come, would be 19,000. But you could also try and front run that to the tune of 20,500, which is your 50 exponential moving average. Golden crosses do like to get retested more often than not. Vast majority of times they do get retested. So and they can simply retest to the 50. They don't have to come down to the 200. They don't have to come down at all. They can just keep going. Here's only a 12 hourly. And when it comes to the daily, however, a bit more of a warning sign, which offers, I suppose, a bit more of a sizable pullback based on what we're seeing here. So obviously no golden crosses or anything like that in sight. Silver crosses, yes, but not golden crosses. Fair enough. So still on a, as far as what it's managed to achieve over this last couple of weeks, pretty impressive stuff. And by doing that, as we've seen on the lower term timeframes, just as we'll see on the higher term timeframes, lots of support has been generated below us. So we're above all major moving averages. So with that in mind, there's many areas of support that we can come down to. So getting caught on any one of these areas for a bounce is fine. I still feel as though, looking at the bigger picture when it comes to Forex and stocks, will probably give us the biggest and best clues as to which direction Bitcoin wants to go on, as it is clearly a risk asset now and being treated as a risk asset, emphasizing any move up and any move down. That's fine. That's fine. And so, yeah, we've got the bearish divergence and we're going sideways, which makes it feel a little bit more vulnerable on the higher term timeframes, really, to any kind of pullback that might be initiated on euro, dollar, Dixie, yen, and S&P. So it's the same old, really. Caution at these levels for new entry points. And to be fair, the next largest move is, for me, I still think is most likely to be down. But there is, like I said, so many supports below us. We can get caught on any one of these and just have a nice big rebound that takes us up to a new high very quickly. Very, very quickly. So, I'm not bearish. Although I still favour a small pullback and I'm happy to wait for that. Just to see this situation reset. I feel as though it is due a consolidation just based on it, naturally. And that's what this is, really. Money flow index is consolidating from a very significant high. Same thing with the RSI is consolidating from a very significant high, but the price action isn't consolidating. So it doesn't necessarily mean the bearish divergence has to play out. It's not how it works. It's just given us an idea that the price will probably follow the consolidation of momentum. And if that's the case, like I say, any one of these areas is good to be picked up on. Given the strength of this move and the and as far as time and cycle is concerned, I'm okay to assume that the bottom is in for a while now. To be honest with you, maybe in full stop. It does feel a lot like 2019 now. It's moving in many ways exactly the same as it did previously, which means that charts in a lot of ways can remain obsolete to an extent, and that even higher term timeframes than that, being the weekly, is still really good. We're not above the 0 point yet. We had the divergence that we've been looking for low to higher low. We're matching a significant low being pulled back on, so all of that matches the previous significant lows over here and over here. So we've got that, and this could have marked the absolute low. And also, if we think about where we go from here, especially like at the beginning of the last bull market, we went straight up to the moon on the money flow index on a weekly, and we've not done that yet. So this could be the equivalent of Bitcoin reaching its, I don't know, $8,000, $9,000, $10,000 zone of the previous bull market beginnings, and then it blows its top off on a weekly, which would incur a much deeper and longer lasting consolidation, to be honest with you. And to be fair, that, if you were to match that with the way that the S&P and the euro and the dollar and things like that look, then that would also match that as well. So I am, like I say, not massively bearish at all, although I am looking at it. I feel like I'm looking down the barrel of a gun, really, when it comes to Bitcoin's price action wanting to pull back. We did reach a significant target here on the weekly, which is your 200 exponential moving average. Last time we touched that was all the way back over here. Back in August, and we did consolidate for a while after that. We could have only consolidated for a couple of months maybe and broke out from here. If it wasn't for FTX, we probably would have done that, and this over here could have been the bottom. But instead, maybe this is the bottom instead. But again, it's all highly speculative. When Captain Noobmaster is pumping the charts up and filling his boots, and to be fair, quite right, to be honest. Like if their opinion is one of investment rather than trade, then yeah, why the hell not? Your dollar cost average on the way down, on the way up. The idea is that we're looking at a lower price from Bitcoin here to where it's likely to be in a few years' time, and so yeah, it's any sort of specific entry point based on the fraction of a percent, it's kind of irrelevant, really. No one catches the absolute low, no one catches the absolute top. The deal is you've got to try and get a nice slice of the price action in between. And if your view is long term, 2-3 years from now down the line, then yeah, I still think this is a relatively decent entry point for you and for me. However, I do come at it from a trader's perspective as well. And the trader in me is saying, oh, there's enough signals and signs here to suggest that we are going to come back down a little further. And maybe we can fill our boots with Bitcoin and crypto thereafter. Now, when it comes to other cryptos, being altcoins or whatnot, this isn't usually an area where we look for significant gains. I mean, and when I'm talking about significant, I mean over 100% sort of gains. This on the dominance chart doesn't suggest that. There's a bit of a no man's land area. The next area we can get in any way start to get excited is when we move into this box from 47 to close to 49% dominance, where we could easily and probably would get a decent rejection, as we have had in the bear markets, and you know, we've done pretty well from there. And it's not to say that we can't break down from here. We could, but if we were to start moving down from here, I would still be relatively skeptical of how large any kind of altcoin gains would be compared to a Bitcoin gain. Yeah, this is something I've been saying for ages. You know, when the dominance chart is low, especially at 40% dominance, this is where you do favor a Bitcoin position over an altcoin position. Obviously, there's always going to be something out there, you know, baby Doge, SpaceX, furry face, coin, you know, token, whatever, which will outperform everything. But generally speaking, on a risk to reward basis, alt to Bitcoin, if that's your trading preference, I know that's what I like to do, and I try to sort of gravitate other people towards that kind of mindset, you know, stacking sats rather than, you know, stable coins or whatever. Then yeah, you move out of your altcoins around here and you move back into altcoins at particular areas of resistance like these. This one worked for a little bit. This one could have worked, it didn't work. Not to say you didn't make any money here, but it would have been less sats, you know. So the next area would be up here, and obviously the dream would be to get a lot higher, so you can have a longer lasting alt season. The definition of an alt season, which would be you know, a longer period of time where altcoins just outperform Bitcoin, and Bitcoin either stays static, trickles up or down, you know, but altcoins basically take the lead for, you know, weeks, maybe even months. So we're not there yet. And this is fine, it's 30 days. Doesn't mean that altcoins aren't going to move with Bitcoin, and some altcoins outperform Bitcoin, but for the most part, risk to reward would suggest that Bitcoin is the main thing to focus on, and I feel like that's appropriate until we get to an area around here. Now again, long-term investment, that's completely up to you. Like, I've got plenty of long-term investment. It's nice to see Matic back above $1 again, and when it gets to 1.2, well, $1.20, that's back to my 100x mark again, so I can sit back and admire that. When that happens, I've got plenty of crypto that I still hold from the beginnings and midway through the last bull market. You know, it's still very much in profit. Happy to keep holding those, including Bitcoin and Ethereum from right back in 2019. But as for stacking up from, you know, more investments at this particular level, not really for me. I'd need to see them come down a little bit lower before I do that. But yeah, again, yeah, putting things into context, it's not a bad place right now if your projection is 2 or 3 years down the line. The problem with altcoins is that it can be extremely choppy. You'll be up 100% one week, you'll be down 50% the next week. You know, and that is the nature of this market. You know, if you're going to hold and invest into altcoins, you got to have a bit of thick skin to ride the waves. And I put this into context a lot of times on the streams. I'm doing a live stream tonight, by the way, for our Patreon members. Feel free to join that. Links in the description below. But, you know, when I bought Ethereum in 2019, about give or take $160, so I bought quite a few of them, you know, at that level. Nothing happened for so long. You know, everything was moving up and everything was doing great. Ethereum just chugged along. I was up for a little bit, I was down for a little bit, up for a little bit, down for a little bit. It was all over the place. And it was only really towards the back end of 2020 that things started to look okay, and I remained in profit thereafter, and I'm still in profit obviously now, you know, 10x up from that entry point. But it's not for the faint of heart, you know. You just got to have you've got to have conviction in your investment, really, and you've got to be able to ride with the waves. Which is why I always say buy, hold, stake. Which is why I like to use the SwissBorg thing that I have at the beginning of some of these videos, you know, because they're an okay platform to do that in, buy, holding, and staking. So, you know, where you can obviously stake your crypto for, you know, while you're riding the waves, while you're up and while you're down. Anyway, I'm rambling here. If you want to know more, obviously join the Patreon. Obviously, if you're looking for more information about a particular chart or whatever, that's the place to go for it. But until then I'll just leave it with you right now. My favorite, I do favor further downside on this chart, whether it happens today or next week, wherever. Like I said, stocks look okay for the moment, but I do have eyes on this particular area around here where we might get a decent rejection, and that rejection could easily just retest some of these zones and then pick up from there. But also eyes on the euro, breaking down from here, big deal. And again, you know, the Dixie has broken out of its falling wedge, so there's reason to think that we're going to have some kind of consolidation across all boards soon. Whether it takes place today, I couldn't say, but you know, the bigger move is still brewing, and you know, and that would be counter to the trend that we've been in so far. Anyway, long story short, I'm bullish for the long term, so let's not get too you know, concerned about what's going to happen in the short term. I'm bullish long term, and with that, I will leave it with you there. And thank you for watching. Hope you have a nice day. Take it easy.